All right, that introductory video is meant to illustrate and visualize for you guys the importance of a stop loss. I loved it. You got a clear cup. It's filled with water. Set the cup on fire. It will burn. When it comes down to the water, it simply cannot take any more of the cup. Placing that stop loss protects your capital. Now, why am I referencing this morning in particular? Because right now I'm doing well with crypto. Last night was another 10K day. I actually was up 12K going into sleep yesterday, continuing to trade these hot cryptos. I've pointed some of them out in the Discord, SPA, SPA, SpearX, one that I gave you guys on this page way over a month ago when it was nice and low. It went up over 150%. It was an incredible win. Now, I had gotten in and out of it, but I happened to be in it when it took off, and it was single-handedly holding up my crypto trade portfolio last night. Going to bed, I put in some stop losses, and they protected me. Some of my bigger positions that I'd gotten back into that kicked me out. Now, I did lose some thousands of dollars, but I would have been down much more, and now I'm able to do something. What am I able to do? I'm able to go back and do some more charting and figure out, well, if this isn't going higher right now, then it's going lower right now. Where is it going to, and where would be a better buy price? And that's exactly what I did. So I know that there's a lot of you that don't use the stop loss because you just plainly tell me in the chat you're not going to do it. But I want you guys to understand that when you become a better trader, when you become I guess you could say a pro. Now, I don't really present myself as a pro, but I would say that I've traded long enough to understand deeply the value of the stop loss and how it protects capital and sets you up to make bigger gains. Because here's the bottom line, guys. I just did a video yesterday saying I'm buying the dip on the meme coins, but these meme coins can move up or down 20%. If a stop loss saves me in the middle of the night and I'm able to get in on a better price, then it increases my winnings significantly. But today's video is not about crypto. I'm going to get into some big tech stocks that you need to be aware of because the stock market and the crypto market are still under the same macro environments that we need to be keeping our eye on. And I'm going to go over some very important big tech stocks and what's happening to them, as well as give you guys some fresh technicals on what we all should expect in the coming days. This is the Stocks with Josh show. Now, today's going to be a busy day for me. Stockmo is going to be doing his daily day trading live on the Discord, and I'm going to join him just to be present and to be part of that event. If you guys want to join us, there's a link in the top pinned comment for the Stock Squad Patreon. If you join, you get access to the Discord. I'm going to be doing that at 10:30 West Coast time. I think it's 1:30 East Coast time. And this evening, Stockmo is doing the Stock Squad live on his page, where myself, Keenan Grace, Stockmo, Stock Up with Larry Jones are coming together to talk. Now, I don't know. That's his hour of programming, but I can tell you what I want to talk about this evening. I want to get into a great conversation about what's going on in the crypto market because there is so much opportunity there and so much to unwind right now and so many hot investments, especially as a lot of stocks are currently pulling back. It's a great time, a great opportunity to turn around and make some money in the crypto market. Now, I'm going to address it. Maybe I shouldn't address it, but there are people who come to my page for stock advice and they're like, Josh, why are you talking crypto? First of all, the reason for that is that this show is not about you. It is about my trade journey that I'm sharing with you. There's a huge difference. So if I'm going to crypto, it's because I'm going to crypto. And, personally, I'm not telling you guys what to do, but, when the crypto market is firing off, there's nothing like it at all in the stock market. The moves are incredible. They're so easy to catch with a little bit of experience, and there's just so much money that can be made there. It's one thing to buy Apple and for it to move up 2 to 10% would be a huge gain, a huge opportunity. A lot of people will be very excited because it's the base of their larger portfolio, which makes sense. But when you can turn around and put a small amount of money into a crypto that's under $1 and it can go up 100, 200%, well, it's a no-brainer. All right, but it's not about crypto, so we're not going to go there right now. We're going to talk about Apple. So I did these videos even when crypto was hot and I actually wanted to talk about it. I came out that last weekend and I talked about watching Apple because I told everybody that we were in a very precarious spot with Apple at that 180 neckline and that Monday would tell the story of whether it was going to be going down or up. And if it went down, it could drag the sentiment of the market down with it. If it went up, it could pump the market. Well, the market clearly spoke on Monday and Apple capitulated, and it's come down quite a bit. And where did it go? It went to the support level that I gave you, which just shows you the importance of marking these supports that I provide you guys. They often play out pretty well. Now, here's what I want to talk with you guys about Apple today. We have another critical support level that we need to watch for Apple. It's the second one I gave you in that Friday show. It's 167.80, and I want to remind you as to what the significance of that price point is. It's the lowest price in the double top that we got for Apple. Apple gave us a peak at $200 roughly, twice forming a bearish pattern called a double top. And the way that it works is if the valley or the lowest price point within those two peaks gets broken, then it confirms a much bigger move down. That move would be to a minimum of 150 and possibly as low as 145. Now, I'm not predicting that. What I'm giving you is the path. I'm lighting the charting path for you to see what could happen based on the warning signs. One of the warning signs that's on the path along the way is that double top valley price of 167.80. If it gets broken, then it's telling you, especially with volume and momentum, it's telling you that the market wants to go lower still. Don't underestimate how low the market wants to go or where some of our favorite stocks could possibly go. Now, personally, on the daily time frame, the Apple stock is significantly oversold. And so I would expect more of a bounce here, which would mean that if we didn't get a bounce here, that's even more ominous. That would be a second confirmation. I am a technical trader. I regard the charts with the highest level of importance. I would even go as far as to say that price is truth. And the only other thing you want to look at is volume. So what these charts are basically telling us is that Apple's in a downturn. It's heated up and oversold quite a bit. It's sitting on a bunch of important levels of support. They would likely hold, but we're going to be looking at momentum and making sure that they do hold, and we get a reversal candle here at the bottom. That area of support I'm going to call the bottom. If it holds, then it will be the bottom, but we're going to be looking for a reversal candle to see if we go higher. If we do, then this would be a great place to buy for a long-term trend back up, but we don't have that just yet. If you stay connected to this page, if you throw in a like here and there, a little bit of love, it pushes the video out to more viewers. Hit that subscribe. We will track Apple together on this page. It's the Apple indicator. It gives us a great view of what the sentiment of the larger investment firms, what their sentiment is towards the overall market. Because as I've said before, when smart money begins to sell their Apple, they'll sell anything. Now, I want to turn this around and talk about two more stocks super quick. The next one is Nvidia. And so I've got a big update for you guys on Nvidia. Some of you think I'm going to tell you that it's coming down. I'm not. Nvidia, in my mind, based on the technicals that I see, has a confirmed move up to roughly $1,000. I don't see a breakdown, but I wanted to talk with you guys a little bit about the fact that on the journey that it's got between now and 1,000, it would be realistic for us to see some corrections in the price. We've had two of them on this massive run up. One was around 12%. The next one was around 6%. And so I just want you to think it through, if you're an Nvidia trader, that between now and that $1,000 target that a lot of people have, I also gave it to you on the last earnings. I said, you know what? It's a confirmed move to $1,000. We're going to likely have a correction, maybe around 5%, maybe as we get closer to 900. We are going to have a correction, and I want you guys to price it in, maybe even look at it as the ideal buying opportunity. Again, I will be letting you guys know if I see that in the charts, both here in the Discord and on the show when I have the opportunity. And the very last stock that I wanted to talk to you guys about was a pick that I had given you guys, again, over a month ago, maybe even more than 6 weeks ago, for Dollar General. And I kept talking about this stock and it wasn't doing too good. It was kind of vacillating, really not dropping or capitulating, but it just kind of ran up a little bit to like 135 and pulled back to the 130 range. And I kept saying, guys, this is going to hit 150. Well, it did that. I mean, I was putting charts in the Discord every once in a while just saying your daily reminder, Dollar General's getting ready to break out and it's going to hit 150. So great success story. Let me know if you had the courage to follow along on that trade with me and make some Dollar General dollars. But let's talk briefly about why I like Dollar General. I just want to remind you guys why I brought it to your attention. Because when it was peaking back in 2022, big tech was on the floor, okay? And so I identified right away that this was a hedge against the big tech play. That if we do see big tech begin to pull back and we see it come and make a swing low, that we could likely see Dollar General, which is basically a low-cost product provider to rural parts of the United States. We could see a flight of retail to cost savings at Dollar General, causing Dollar General stock to have better earnings, better profits, and begin to go back up and make a swing high, maybe even go back to all-time highs. And that was what I began to see. And I said to everybody when I gave this video, I said, this is a 12-month play. I said, I'm accumulating down here where nobody wants it. It's ignored. It's not sexy. Big tech's having great days. I'm going to accumulate this while it's down here because I believe that when big tech finally does cool off, we're going to see it take off. And that's actually what we've begun to see. Around the time that Apple began to capitulate is around the time that Dollar General gave us this 150 price target that I gave you. If you remember the times that I covered Dollar General, I said that we would first hit 150 and then we would make a push and an attempt at 160. Now, 160 is still on the table, but I wanted to give you guys some technical updates for everybody who's watching to understand what we're up against. Because even though I'm bullish on Dollar General, if you're interested in Dollar General, don't FOMO in at the top. Wait for a correction. Wait for a little bit of a pullback, which I think will come. And I'm going to give you guys the support levels for that. But I do think that while we're still in this momentum move up, it's absolutely possible that we can get to 160. That's where I'm going to hold my shares, but hedge my shares with an equal number of puts to protect to the downside, which simply means that if my shares go up in price, I will enter into puts around 160. And then they will profit if it pulls back, and the profit of those put money will be put back into the shares to increase my position. It's a long-term strategy. I hope it makes sense to you guys. Let me know in the comment section. Let me quickly do a shout out for the Moomoo investment app. There's at least 30 days more for the opportunity to use this app. Right now, it's a great offer. They're giving away up to 8.1% interest rate. So that's right. You can just put cash in there. You don't have to trade or buy anything. They'll just pay you to store your cash on the platform, right? And then after 3 months, it drops to 5.1%. But it's basically free money for just sitting your cash in, taking no risk whatsoever. It's a pretty good offer. You guys should check it out. Plus, they'll give you up to 15 free stock. And if we are going to get a big pullback, it might be the right time to begin to store up and collect some money to buy the pullback that's coming, with the idea that Apple's pulled back already. But depending on what happens at that 167 price, we could be seeing an incredible, I would say, I wouldn't call it a once-in-a-lifetime opportunity, but a rare opportunity to buy Apple, a great company, on the cheap. Now, I've got an Apple video that's in me that I'm trying to unleash to you guys in the coming days with the Vision Pro goggles and some other things I see going on in the charts. So expect that. Apple's a good company. They're going to be going through a storm. Just like Tesla, kind of going through a storm right now. It's normal. Don't get scared. Get prepared. You got to buy red to be able to sell green one day. So that's how I feel about it. Look for me in the live, in the Discord, and in the live on StockMo's page today, 7 p.m. Eastern Time. You guys know I love you. Peace and blessings. Hit the subscribe and hit that like to send the video out to more of your friends. Appreciate it. Take care. Bye-bye.